Welcome to Coachable Wealth, where we blend the worlds of sports and finance to bring you strategies as you navigate your wealth building journey. John, Cody, and Sean are here to help you elevate your financial advisor relationship to meet your long-term goals. Now let's get to it.
I'm getting my last couple weeks of snowboarding in because I think spring is soon to be around the corner. And let's watch the Flyers Penguins. Always a good rivalry, and the Flyers came up just short by one goal. Also, we're about a week out from the new Formula One season, which feels like it just ended. But excited about that.
Do you follow Formula One pretty close?
Yeah, I started watching the Netflix documentary maybe a few years ago, and something I never knew about, and just got super interested in it. And early morning Sunday races, usually up after a workout, just sitting there drinking some protein and just, watching the race.
Who was the driver that made a huge move? Is he changing?
Hamilton?
From Mercedes to Ferrari.
Lewis Hamilton won 6 or 7 championships with Mercedes up until about 2 years ago when Max Verstappen from Red Bull started winning. And it doesn't look like anybody's going to catch Red Bull anytime soon. They just had their testing over this. And the headline of some of the articles I read were, no one even closes the gap a little bit to Red Bull. So it looks like it's going to be a dominant year for them again.
Wow.
It's funny Sean said about Formula One. When I was just getting ready for work this morning, I saw the preview commercial on ESPN for, I guess, next weekend's race. I forget where it is.
Bahrain.
But I saw that it's next week.
Yeah, it's over in the Middle East.
Oh, okay.
I know Sean doesn't want winter to come to it, but I think we're kind of on the last couple of days, it sounds like, of winter and potential snow. But I did watch some spring training on Sunday, the Yankees versus the Phillies, and it was great to watch some baseball finally, and hopefully the warm weather is right around the corner.
Yeah, I didn't watch it, but I got some updates and saw that the Phillies threw a decent amount of their Nola started for them, but then they played their other pitchers that are actually going to most likely make the team and be a big part of the bullpen going forward. So it was good to see them have a good first outing in spring training.
You guys think the Phillies are primed for another deep playoff run with how hard it is to be good for – people don't think 3 years in sports, that's a long time, so it's hard to sustain that.
Yeah.
Do you guys think there's another run coming?
I hope so. I mean, they definitely have the team to do so. They didn't really lose anybody hugely valuable over the last year. If anything, they should get a little better because some of the younger guys on their team should continue to hopefully progress and get better as the years go on.
Yeah, I agree. I mean, and it's been years, I feel like, since the Phillies had some young guys that actually materialize. I mean, Scott's a year older, some more experience. Hopefully Rojas kind of continues his upward trajectory. And I know he's been good in the outfield, but hopefully he gets that batting average up in the postseason. Hopefully they make it.
Yeah, I mean, I don't think it can get worse than what it was in the postseason. So, hopefully I know he's been working hard in the offseason, so hopefully he does a lot better. And then Bones, obviously, I mean, he's been in the majors for a couple years now, but hopefully he continues to get better. And same with Brandon Marsh.
Yeah. Yep. And a full year of a healthy Harper, who's more comfortable at first base, should help him out tremendously too. And hopefully JT sticks it in for a whole year without kind of.
Speaking of baseball and coming towards the season, how about some of the contracts that were handed out over the offseason to Ohtani? Then I'm not even going to try to pronounce the name of the pitcher that came from Japan, but some of these contracts are just getting insane in baseball.
I mean, Ohtani, what is it, 700
million? Yeah, 10 years, 700 million.
And the Japanese pitcher, I guess the interesting thing there is the Phillies actually outbidded a few teams, but he decided to go another route. He didn't want to go for the highest bidder. He actually kind of picked a team where he really wanted to go to.
Yeah, I think it's interesting looking at some of these huge contracts, whether it's in baseball, basketball, or football, and then a couple years later, see if it actually panned out or if they did overpay. So Ohtani getting $700 million over 10 years, so $70 million a year. The pitcher from Japan is actually so he got a 12-year, $325 million contract. Bryce Harper's was 13 years, 330. So the Japanese pitcher who's never played in the MLB is making more than Bryce Harper, which is crazy just thinking about it. And I know there's rumors that Harper's looking for more money now just because he thinks he's undervalued. I mean, if you break it down, he's really only making $25 million a year, which is not towards the top in baseball.
And I think you're going to see that continued growth where, you might have a big contract here in 2024, but by 2030, that's just going to be a mid-tier contract with the trajectory of sports and the revenue that it produces. So I think in the MLB is different where it's all guaranteed.
Yeah.
Ohtani could never play another pitch and he'd get his $700 million. When you figure baseball has such a higher longevity than other sports, that it's all guaranteed.
I do think that's kind of crazy. And I know NFL is slowly moving towards there. A lot of the larger contracts here recently have been a lot more guaranteed money, maybe less years. I think Mahomes is still the largest contract ever in NFL. But if you look back, so it was 10 years, $450 million. So now going into 2024, making $45 million, he's the 8th highest paid quarterback.
I think there's a lot from an athlete standpoint, though, is at a certain point, whether it's $45 million a year or $65 million a year, that everything's taken care of. And it's, are you in a good situation? Are you able to win? Are you in the city you want to be? Are you with the coach, with the offensive coordinator, have the teammates around you? At a certain point, I think the money just becomes a very minuscule part of it. And the surroundings and other parts are more important. You probably, if you ever had a conversation with that pitcher from Japan, he'd probably say something similar, that at a certain point, there's some other things that factor into it.
Yeah, definitely. And I know that's how it is when we talk to our clients that are potentially looking to change jobs or potentially maybe retiring earlier than they initially thought. They thought they're going to work to full retirement age at 66 and a half or 67, but now they're in a completely different standpoint where interest rates are right now. They have saved up a lot more than what they thought, and maybe they are retiring early because they have the money. They don't have to continue working longer, or for a professional player, they don't have to go somewhere just to make more money. They can take the contract that they have. And
that's a great point. And I was just kind of looking at some of the more specific, I guess, details around some of the contracts here. I mean, I know the Manny Machado and Bryce Harper, that's kind of what Cody was talking about. And Manny actually just restructured his contract a little bit to get more to the current day value. Bryce Harper, he kind of got a little, I guess, screwed in his contract because he opted for the no trade clause, meaning he can't restructure. He's locked into that for, I believe, $330 million for 13 years. Like Cody was saying, it's about 25 a year. So Manny Machado was open to kind of keeping that trade clause out there. Bryce Harper was not. So Manny got that new contract. Bryce didn't. So I guess they're going to talk about restructuring a little bit. And I think didn't the NFL too just increase their salary cap by 30 or 40 million?
Yeah, I think it was the largest increase ever for the NFL.
So yeah, like Sean's point too, I think the future of these contracts is just going to continue to increase, and probably with the guaranteed dollars.
Yeah, it's obviously great for them. And I know here recently you've seen a lot of younger players, especially in baseball, signing a 10-year contract where they've only played a half a season in the MLB, locking in a very low annual percentage. But if they're like, I know $70 million, I will be perfectly fine for the rest of my life. I don't have to risk the upside if they do have an injury. So talking with your team, your advisors, your agents, is obviously very important when you're looking over these contracts.
I think one thing people have to realize too is that so much of that contract, when people compare, well, this player on the Phillies is getting this, but this player on the Angels is getting this. It's location, and it's, would you rather have a $325 million contract in Pennsylvania or $400 million in California, where you're going to be taxed almost double what you're going to get taxed in Pennsylvania? So I think that has a lot to do with it too. So when you see the overall thing, what do you actually get to keep at the end of the day between your agent, your
That was the interesting part about Ohtani's contract, is I think a lot of it is deferred, that he gets paid whenever he's done or he's retired. So a lot of people are speculating that maybe he's going to move to Florida or, potentially back overseas where the potential taxes are so much lower for him.
Yeah, and I think the calculation behind that was even though it's $700 today in present dollars, it's deferred. I think for what 10 years or something like that.
Yeah.
It's going to be well above $1 billion when you start indexing it out for the future.
Yeah. It's going to be crazy.
I don't know who helped him to write that contract, but it was almost genius how they kind of structured it.
Yeah. And it also helps out kind of the Dodgers in the near term because there is not a salary cap, but MLB can spend whatever they want. But if they go over a certain threshold, then they have to pay a tax on top of their current payroll. So him doing this also lets them spend more money, which is why they were able to go give another $325 million to the Japanese pitcher. So they spent well over $1 billion this offseason.
I know this is trying to think back to the contracts here. Like Lamar Jackson. I think of Jalen Hurts too. I mean, Jalen signed a new contract last year. Lamar Jackson kind of held out. And I don't think he even had an agent there for a while.
No.
But
I don't think he did at all.
Yeah. But look at the value. I mean, like Lamar Jackson, look at the season he had, the value he kind of created for himself.
Yeah.
Just kind of playing the long game a little bit. I mean, Jalen Hurts got the big contract, didn't have the best of the season. So, I mean, we'll see kind of how that's valued in a couple of years to see if he can bounce back next year in the next couple of years. But, yeah, it's interesting to see how these current contracts and you look out into the future to see kind of how they materialize.
Speaking of that, I think one very good correlation that's been top of mind here over the last couple of years, especially I would say in 2023 and the first couple of months of this year is NVIDIA and how much NVIDIA has grown over the last couple of years. So in the start of 2023, NVIDIA's market cap, so how much their company was worth for their public stocks was around $300 billion. Well, as of close on Friday, it's at like $1.9 trillion. So they went from 300 billion to 1.9 trillion in a little over a year. But if you look at their price per earnings, which is a valuation that you can look at for the company, they're, I guess, cheaper now than they were just 14 months ago.
I saw last week when the earnings came out, I think it was right around market close. And then in that 60-minute window, I think their market cap after hours went up like 130 billion just in that 1 hour post earnings announcement.
Yeah, I know in one of our podcasts we did the other week that Meta had the largest market cap increase in one day, but NVIDIA last week kind of blew that out of the water after their earnings call. I think they increased from like 1.6 trillion to 1.9 trillion in a single day.
You guys feel that tech is going to lead the way in 2024 again?
I think it'll be interesting. So if you look at some of the other large tech stocks, like Apple is still close to 10% below their all-time highs. But NVIDIA, on the other hand, is continuing to make all-time highs, it seems like, every single week. And then there's other, like Google is pretty much flat since the summer of last year. Same with, some of the other large cap companies, like Microsoft has gone up a little bit, but not near the growth of NVIDIA. So it'll be interesting to see how some of the other, large cap tech stocks continue doing going forward.
Yeah, and it sounds like NVIDIA, they're probably going to keep on this upward trajectory here. I don't know if it's going to be as good as what they announced this last quarter, but you would think like one of their biggest catalysts, can they keep up with the demand? I mean, everyone kind of needs that chip.
Yep.
For all the technology enhancements. So it seems like that might be the biggest catalyst. Can they keep up with the demand that is out there?
I think that's pretty much what their CEO said on the earnings call is they literally cannot keep up with the demand as of now.
To kind of what you're saying there, Cody, I would think too. I mean, NVIDIA is the big gorilla in the room right now, but it's also going to open the door for some other smaller chip manufacturers to also start producing and be successful. And I think to Sean's point, that's probably going to lead the tech rally throughout the year with AI coming aboard here and becoming more of a common topic of conversation. It just seems like that everyone needs that, again, that chip demand to kind of fuel their growth here into the future.
Yep. Actually, since we're on this podcast and the market open now Nvidia is over $2 trillion more of market cap.
Are they the largest now? Or are they still lagging behind?
No, so Microsoft is the largest, a little over 3 trillion. Then Apple's at 2.8 trillion, and then Nvidia is at a little over 2 trillion now. But Apple was the first company to hit 3 trillion, which was in the summer of last year. But now it's down to 2.8.
And it sounds like Apple is lagging a little bit behind the Microsofts and NVIDIAs just for kind of some innovation right now. But I mean, I wouldn't be surprised if they have a tailwind here at some point to pick up their speed, some growth into 2024 here.
Just based on their last earnings call, Apple's revenue year over year was only up 2%, where Nvidia's was up 265%, which is why if you look at the valuation side of it, Nvidia's stock is actually cheaper now than where it was last year, even though it's up 400%.
That's interesting what you said there, Cody, because a lot of people, everyone reads these articles about the Magnificent Seven. It's all over CNBC, and Jim Cramer talks about it every day. And inside of those seven stocks certainly led the way, but inside of those seven, if you take out NVIDIA, it was just sort of an above average year for the most part. NVIDIA has really been the driving growth in that. It'll be interesting to see if other companies can hold up their end of the bargain there too.
Yeah, if you just look at year-to-date numbers, which are a little over 2 months into the year, Apple is actually negative almost 7% on the year. Google's flat on the year. Microsoft is only up 8%, but NVIDIA is up almost 70% over the last couple of months. So as you were saying, John, if you didn't hold NVIDIA, pretty much the rest of the large cap tech stocks are flat or up a little bit on the year, which is right in line with the S&P 500.
Some of the index funds, I mean, large cap growth, obviously, the Magnificent Seven, they're so heavily weighted to those stocks. What conversations are you guys having with clients just around diversification or rotating out of large cap growth into maybe value or just some different sectors, emerging markets, stuff like that?
It's not a bunch of rebalancing out of it. I would say more of the conversations are clients calling in saying they want to get into NVIDIA, Apple, Google, and that's where we have to have the conversations that you are in them. And those are the largest stocks that you hold because your largest weighting is the S&P 500. But we also want to point out that there's other areas inside the stock market, especially not the US or even inside the US, like small cap value is actually undervalued compared to their long-term history. Where some of these other areas inside the US, like large cap growth, for an example, if you look at long-term history, you can make the argument that they're overvalued. But there's a bunch of areas outside of that where you can pick up some growth going forward. And potentially, if we do have a slowdown, they may not get hit as hard as some of these large cap growth stocks.
I agree with that. I'd also say I hear some conversations of, I feel really good in that sector. What should I be doing outside of that? Because I think everybody at this point has, the large cap and the tech stock in their portfolio. They like it. Most people are wise enough to say, well, I'm not going 100% all in on that. What should I do outside of that? And I think that's where you can get the bump in, emerging markets, the international market. And also, too, I think collect some high yields on the bonds until the Fed decides they're going to lower interest rates one day, which is a totally another podcast conversation that you could have for hours on what the Fed's going to do, because it doesn't seem like they even know what decision they're going to make. But yeah, I would say certainly people are invested in that sector, like Cody said, but I've been hearing a lot of what should I be doing to complement that.
Yep, that's a good point. And regarding the high yields or the interest rates you can get now compared to pretty much the last 10, 15 years, the money market yields are great right now, but as Sean was saying, eventually the Fed is going to cut interest rates. So now it's about locking in some of that duration on bonds and locking in that yield on fixed income and going into bonds and not just sitting in the money market. Because when the Fed does cut interest rates, the money market yield is going to be the first thing that drops. Where when they do cut, most likely you're going to have a bump up in principal inside the fixed income side. So you're going to get the yield that you locked in plus potentially some price appreciation on the fixed income side. Which again, as Sean was saying, is kind of a whole other podcast. We could talk for a long time about it, so we don't want to get into the details now. But there's definitely a lot of opportunities outside of the large cap growth. Not saying, completely rebalance it. It's definitely still going to be most likely the highest weighting inside of your portfolio. but you have to make sure you understand the other areas inside your portfolio too.
Agreed. For people out there, who may be listening to this, who do have a high amount of cash in a money market or high interest savings, do you guys follow any golden rule of, well, how much is too much in my money market?
Yeah, I think anything above 6 months of expenses. So say or if you have a larger project coming up, so say in the next year you want to build a pool and that's going to be 50 to 100,000 of, depending on how big of a pool and the landscape you do around it, or if you want to buy a new car, I think you should keep that amount in the money market, plus potentially, an emergency fund of 6 months of expenses. Anything on top of that, you should be looking at diversifying into your portfolio, even if it is on the more conservative side, because eventually the Fed is going to cut interest rates this year. As Sean was saying, it's completely all over the pitch right now. At the beginning of the year, everybody thought they were going to cut in March. That is pretty much completely off the table now, and people are looking towards May and June. But I would say anything that you're not going to spend over the next 6 to 12 months, you should be looking at getting invested.
I was just thinking back to the NVIDIA stock and just the long-term growth that it's had over the last decade or so. I mean, there's a lot of individuals out there that hold individual NVIDIA stock, or even probably Meta or Amazon, Apple, that have low cost basis.
Yep.
And obviously, if they were to sell that, they're going to potentially realize a huge capital gain.
Yep.
Have you guys seen any of that going on, or any recommendations kind of how to handle that?
Not specifically in NVIDIA, but I have some other clients that hold some other large cap growth stocks that have huge gains inside of their brokerage account, where if they did sell it, then they would have a large capital gain. So you just have to make sure you have those conversations that, okay, maybe that means we're going to lower the allocation to the S&P 500. We're going to build in some higher allocations around that because we don't want to raise a huge amount of capital gains there. But then also just making sure that that position isn't, jumping up to like 20, 30% of their portfolio.
Another conversation around that is gifting.
Yep.
Gifted into the donor advised fund, and you can get some kind of reprieve from potentially realizing a large capital gain, but that could be a nice gifting conversation around that too.
Yep. That's a very good point.
I think you're going to see a lot of folks hold those types of tech stocks without touching them until they become part of the next generation and they get a step up in basis.
Yep. Unless, going back to what John was saying, if they have a charitable intent and they want to gift some from their brokerage account, gifting those stocks that have a huge appreciation in price is definitely a good way to do that.
Yeah, and that's something too that we certainly help our clients with, is if you have appreciated stock and you don't really want to take the taxes on it, you're not sure what to do. John, you're big in helping plan the wealth transfer and as well as doing the charitable gifting.
Yeah, it's definitely important to talk to your advisor, or if you're not talking to an advisor, making sure you're having those conversations regarding your stocks. And if you don't want to raise the huge tax line item, make sure you have the conversations of, okay, well, what are good ways that I can rebalance out of this without raising a ton of taxes?
Kind of what we talked about earlier with Ohtani. Obviously, he has this huge contract for like $700 million. In the future, it's going to be probably north of $1 billion. But then just beyond signing that contract, he probably has a whole team of his agent, an attorney, potentially a CPA. I mean, just looking at the tax ramifications of that, kind of where he's living at. I mean, I think it kind of goes for all professional athletes and also families. I mean, if you're a high income earner, even though you're not making $700 million, you still might be at $500,000 making annual salary. There's still huge tax implications in that. And then even if you live in California making that $500,000, California's income tax is still extremely high. So I think, kind of to both your point, just to make sure you're talking to the appropriate professionals, just to make sure you're mitigating those risks.
Yep.
Being proactive, that proactive communication, getting ahead of what could go wrong, and don't prematurely do something on your own without talking to your professional team.
We hope you enjoyed this episode of Coachable Wealth, brought to you by Morton Brown Family Wealth, an SEC-registered investment advisor. This podcast is designed for educational and informational purposes and not intended as investment advice. More information can be found at www.mortonbrownfw.com.